Hello there. If you're a digital nomad or remote worker with any connection to the UK, the way you are taxed is about to be completely transformed. For years, the system was built on really complex, old-fashioned rules. Well, from 2026, all of that is being swept away. This means if you're working internationally, the tax strategies you've probably been relying on are now, frankly, obsolete. To help you get your head around this massive shift, we've worked with the expert tax advisors at Pro Tax Accountants to bring you a clear, essential guide for this brand new world. So let's just dive right in with a straight question. Have you been using your non-dom status to help manage your UK taxes? For literally generations, this was the absolute cornerstone of international tax planning in the UK. It was the go-to strategy for almost anyone with foreign income. Well, from April 2025, that entire system, it's history. And I want to be really clear about this. It's not just being tweaked, it's being completely torn down and replaced. This means a huge amount of the advice you might have heard over the years is now not just outdated. It could be a really expensive mistake to follow. With so much changing, getting a really clear picture of the new rules is absolutely critical. So let's get started and break down exactly what you need to know with the help of the experts at Pro Tax Accountant. Okay, here's how we're going to walk through this. First, we'll nail down exactly what's changed with the old rules. Then, we'll tackle the single most important question you can ask: are you a UK tax resident? After that, we'll look at the new 4-year tax break for new arrivals. Then, the hidden tax traps for those of you working abroad. And we'll finish up with an actionable playbook for 2026. Right, so part 1. The old rules are gone. And look, this isn't some minor adjustment. It is, without a doubt, the biggest shift in UK international tax policy in over 100 years. This slide here really shows you the fundamental change in thinking. In the old world, your tax was based on domicile, this kind of fuzzy, old-fashioned concept of your permanent home, often tied to where your father was born. It was all a bit subjective. And that allowed for the remittance basis, where you only paid UK tax on foreign income if you actually brought it into the UK. Now, it's all about residence. A simple black and white question of where you physically spend your time. And that means your worldwide income is taxed as you earn it, which kills that old strategy of just keeping your money offshore. So, this huge shift to a residence-based system makes one thing absolutely crystal clear. You have to know your residency status. And that's not a matter of opinion anymore. It's decided by one thing: the Statutory Residence Test. The Statutory Residence Test, or SRT, is exactly what it sounds like. It's not a negotiation, it's not about your intentions. It's a strict, flowchart-based calculation that HMRC uses based on the number of days you spend in the UK and your connections to the country. You just follow the steps, and it gives you a very clear yes or no answer. This is the bedrock of the entire new system. So how does it actually work? Well, think of it as a 3-stage process. First, you check if you're automatically non-resident. This is for people who spend very little time here. Easy enough. If not, you check if you're automatically a resident, which you would be if you spend over 183 days here, for example. But if you fall somewhere in that gray area in the middle, which is where a lot of digital nomads and remote workers are, it all comes down to the tiebreaker, the sufficient ties test. Now, this is where it gets really important. And honestly, this is the part that catches so many people out. The test looks at your ties to the UK, things like having your spouse or kids here, having a home available to you, or doing a certain amount of work. And here's the key takeaway from this table. The more of these ties you have, the less time you can spend in the UK before you're pulled back into the tax net. So for example, if you've recently left the UK and you still have just 2 ties, you could become a UK tax resident again after spending only 91 days here. That's it, just 3 months. Okay, so that's how you become a resident. But what about for new arrivals? Or maybe you're returning to the UK after a long time away. Well, the government has introduced a major new incentive called the Foreign Income and Gains, or FIG, regime. The simplest way to think of it is as a 4-year tax holiday. Now, you have to know that the eligibility for this is very, very strict. You must have been non-resident for 10 full consecutive tax years. There's no wiggle room here. So let's take our example, Anya. She's a software developer from Berlin, hasn't lived in the UK for the last 12 years. If she decides to move to London in 2026, she easily clears that 10-year hurdle. She qualifies. So what's the deal? Well, for your first 4 years in the UK, you can choose to pay 0 UK tax on all your foreign income. And this is the big one, you can bring that money into the UK tax-free. But of course, there's a catch. For any year you use this, you lose your tax-free personal allowance. That's the first $12,570 of income, and you also lose your annual capital gains tax allowance. So you have to do the math. Is the tax you save on your foreign income worth more than the tax you'll now pay on the very first pound you earn in the UK? We've covered coming to the UK. Now let's flip it around and look at the risks for UK residents who are working abroad. This is where many remote workers get caught out by rules they didn't even know existed. Right, if you're a UK resident and you're planning on working temporarily anywhere in the EU or EEA, you absolutely need to know about the A1 form. The best way to think of it is like your social security passport. It's an official certificate from HMRC that proves you're paying your national insurance here in the UK, and that stops the authorities in, say, Spain or Italy from turning around and demanding you also pay into their local system. It's crucial. And here's a critical point directly from Pro Tax Accountant that you really need to hear. This isn't a one-and-done thing. You need a new A1 form for every single trip to every single country. So if you're planning to work in France for 2 weeks and then pop over to Portugal for one, that's 2 separate A1 applications you need to make. Ignoring this can lead to some serious admin headaches and even fines. Now, let's talk about a tax that so often gets forgotten by people leaving the UK, usually until it's far too late. I'm talking about inheritance tax. A lot of people just assume that once they leave the UK and become non-resident, their estate is safe from HMRC's reach. But is that really true? For many people, the answer is a 10-year no. Under these new rules, if you've been a long-term UK resident, your entire worldwide estate can remain on the hook for UK inheritance tax for up to 10 years after you've left and become non-resident. It's like a long tax shadow that follows you when you go. And this is a major trap for anyone who hasn't planned for it. Okay, we've gone through the new rules and some of the biggest risks. Now, let's get proactive and talk strategy. What can you actually do to navigate this new era effectively? This is your 2026 Nomad Playbook. All right, if you're one of those people with untaxed foreign income from the old non-dom days to sitting in an offshore account, the government is offering a special one-time deal to bring it back to the UK. It's called the Temporary Repatriation Facility, and the most important number you need to remember is 12%. But, and this is a big but, it's a strictly time-limited offer. You have just 2 tax years, that's 2025/26 and 2026/27, to bring those funds home and pay a flat 12% tax on them. After that, the rate goes up. The message from HMRC is pretty clear here. Use this 2-year window to clean up your affairs at a much better rate. And this table here really shows the new global game. As the UK tightens its rules, other countries are rolling out the red carpet for remote workers. Spain's famous Beckham Law offers a 24% flat tax rate. Portugal has a 20% flat rate for 10 years on certain types of income. And Greece? Well, Greece has an incredible 50% income tax reduction for 7 years. The really savvy nomad in 2026 will be looking at how they can become non-resident in the UK and, at the same time, take advantage of one of these amazing overseas deals. Okay, you'll definitely want to hear this part. Here's a huge pro tip that catches so many people out, especially in the tech world. It's about cryptocurrency. You might think that your gains from trading crypto are foreign gains if your exchange is based in, say, Malta or Singapore. Wrong. HMRC does not see it that way. For a UK resident, they see crypto gains as being based in the UK. And that means your crypto profits are not covered by that new 4-year tax holiday. You will pay full UK capital gains tax on them from day one. That is a vital detail to be aware of. So, if you only take away one thing today, let it be this. In 2026, your UK tax status is no longer about the fuzzy idea of where you're from. It's all about the hard fact of where you are. Right, let's quickly recap the 4 most crucial points. Number 1, residence is everything. You have to get to grips with a statutory residence test. 2, that 4-year window for new arrivals is a powerful tool, but it's temporary, and you need to do the sums. 3, the 10-year inheritance tax shadow means leaving the UK needs some serious long-term planning. And finally, number 4, you have got to be proactive. The old playbook is gone, and relying on it is just going to be costly. Now, I have to make it very clear that everything we've talked about here is for general guidance only. Your personal situation is unique, and these new rules are very complex. You should always take professional, tailored advice from a qualified advisor before you take any action or make any financial decisions. To get that expert advice, you can speak directly to the specialists who developed all this analysis at ProTax Accountant. You can reach them on WhatsApp or by phone at 07985689912, or just drop them an email at info@protaxaccountant.co.uk. And for more essential updates just like this one, make sure you subscribe to the ProTax Accountants channel on YouTube. Thank you for your time.